Hello, everybody. It's Bob Anderson, and it is April 6th, 2023. I'm doing a video that is the day before Good Friday, Easter weekend. So, just for example, like today is Thursday, tomorrow's Good Friday. Good Friday, the market's open for shortened hours, whatever. I mean, I'm not going to take any trades tomorrow. I don't recommend anybody else take any trades tomorrow. And knowing today was the day before Good Friday, I really limited my trading. I only took one trade. I took the open range break in oil. I ended up with 23 ticks, $230 a contract on a short for all my accounts, every account. So anyways, the point of this video is for me to go over some stuff try to do some house cleaning, to try to do some clarity on some certain things, because I have been paying attention a lot more lately in my free time. In my free time, I've been paying attention more to what traders are saying, and through Facebook and the emails that you guys send me and stuff like that. And I every once in a while I pick up on some things that I may not convey well, or have not conveyed even in my past videos. An example of that is, I don't know if you guys know this, but I get solicited quite often to represent different trading platforms, different trading systems, different prop firms and whatnot. And one of them contacted me a couple days ago and said that he loved my videos and how I hit that intermediate trader and teach them that next step. And I thought to myself, I didn't even think about that. I really don't bring this stuff down to, in a lot of cases, the entry level. So I want to talk about some things that are almost entry level, but they're also good reminders for those of us long in the tooth that have traded for years. And that's some basic things. One of them is this, about knowing your instrument and screen time. I have publicly said in my videos and in some emails and some responses from people and whatnot that I have not been trading the ES. Shoot. I mean, I'm not. I don't hold me to this because I would be a liar. But I mean, if I've taken more than a handful of trades in the ES in the last 30 days, I'd be surprised. I have been trading the RTY and the CL. And the reason for that is because those are the only two that are acting right. You got to know your instrument. And somebody recently tried telling me, oh, it's the NQ. The NQ's the one. The NQ works at times also, just like the ES works at times also, just like oil works at times also, just like the RTY works at times also. But to make you a better trader, you've got to recognize when they're not working. Because I can tell you this, the NQ can stop freaking working really freaking fast. All you need is some instability in the tech industry, and NQ will start acting completely stupid. I mean, completely stupid, and steal your money. Why is the ES acting stupid lately? I think because of a lot of the instability in the banking industry right now. And so I just think that there's just not any rhythm in it right now. Last August, all the way through into about middle of October, I traded only the ES every day and made money in it every day. If I had to trade the ES every day for like the past month, I probably would have struggled really bad. So you've got, and so that goes back to this second part. look left and why. I keep 3 instruments on my screen. I know you guys don't have, some of you guys don't have the ability to put 3 instruments up. But if you're looking at the instrument that you're paying attention to, say the ES, and you look to the left and you don't see that it's in rhythm, don't think that it's going to be in rhythm as soon as you get into it. I mean, that's the thing about rhythm. Rhythm starts and rhythm stays. And then sometimes rhythm will stay so much, it doesn't come out of rhythm all the way until like 3 o'clock in the afternoon. I mean, sometimes the market can, one of your instruments can get into rhythm and just stay there. But if it's in rhythm, then the likelihood that the next trade you're going to take is going to be in rhythm also. So you've got to look to your left to see if the market is in rhythm. Is it respecting your moving averages the way you expect? Or is it pulling into them and then pushing away? Is it breaking the candles and running? Is it doing the things that you expect? If you look to the left and you see that the last candle that you thought should have been broken didn't break, then I wouldn't expect yours to break either. So, and then of course, knowing your time frames and stuff like that. I can't emphasize that enough. I know the continuation trade is a great trade and whatnot, but it's only good from 9:45 to about 10:30. And then it starts losing that. Does it still respect the 1 minute 9 EMA? Yeah, but that's not what this is about. We are not just looking for respect, we're looking for follow through. That's where you get the risk reward. I had a rancher from Wyoming message me today, and he said, I found your videos, and he says, this is totally different than what I'm not going to get into it, but he talked about the thousands of dollars he's lost in the last couple of years trying to learn a trading strategy with a 17 tick stop loss and a 7 tick target. You might have a good win rate, but you're going to have a pretty bad P&L if that win rate isn't through the roof. And and here's the funny part about looking for a 7 tick target. A 7 tick target. This is in the ES, by the way. I don't need the market to go against me 17 points before I figure out that I'm in the bad trade. I mean, if it needs to go 17 ticks against you before you figure out you're in a bad trade on the 7 ticks you're trying to get, then you probably don't even understand your instrument. Anyways, so when you're looking to the left, step 1, is it respecting the market? Okay, that's 1. Respect. 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 Okay? But second, and this is just as important. And this is why I use timelines, because for the average trader, it's hard to teach this, what I'm about to talk about. But it's the expansion of the market. The reason I tell you 9:45 to 10:30, for example, on the continuation trade, or the 5-minute gold line, I say 9:45 to 12 p.m. Okay, do you know why I say those two things? Because statistically, if you take trades in those time frames on these two strategies, for example, you're going to be trading in a time when the market has expansion. Expansion being that before the trade happened, you're looking for 5 points, right? So before the trade happened, price went from here to here and pulled back to here. And this was like about 8 to 10 points. This pullback is, by the time the moving averages get there, is like about 4. 4 points. And so your likelihood of hitting up here to 5 or having room to manage your way out of it increases. When does the market have this type of expansion? Well, it happens that type of expansion in these time frames. Does that mean it's the only time the market has that type of expansion? No, there are days that the market expands and contracts and expands and contracts pretty much all darn day. But it's easier for me to say to you, look for the trades at these time frames and these time frames, because than it is for me to teach you how to read the market expansion. And it's not as simple as the average range or whatever. It's not as simple as that, because the movement may not be just 3 candles. It may be 5 candles. It may be 1 candle. That leg could be a myriad of candles. But the point is, did it have the move? Did it have the pullback? Did it reach a pivot high? Did it have the pullback into here? And does it have room before it reaches that top again? And did it have room where it came from? So that the likelihood of that continuation is going to be 5 points. If this leg right here in the 30 minutes, 20 minutes, 10 minutes, whatever it is, leading up to this pullback and this, if this is 4 points, it's going to be a miracle for this to extend 5. And remember, it's about risk reward. We're not scalpers. We're not scalpers. It's not worth taking the trade here if all you're looking for is a point. It's not worth it. That's how you're going to blow up your account, is by just dicking and dunking and getting a point. So market expansion is the other thing you have to see. So what's a good example of that? Well, I'll tell you, good example of that is today. I mean, it's the day before Good Friday. The market's not expanding. Why did I take one trade and get out? Because I expected that. I had a trader message me. He took 2 perfect RTY trades, and they both reversed 1 tick from his target. 1 tick from his target. And I told him, and he took them in this time frame right here. And I said, it's because there's no market expansion right now. It's the day before Good Friday. So you got to know your market, know your trades. For example, yesterday was oil inventory report. I'm going to put a link down below of when the inventory reports are announced in the time frame. Normally they're on Wednesdays, but if there's a holiday during the week, sometimes they're on Thursdays. And I just totally ignore oil that day. That's why I didn't get my head snapped off on some open range break trades on oil yesterday or any of that, because I was totally ignoring oil. I mean, there's no sense in playing it when it's not going to be playable in the rhythm that I'm looking for, because the players are going to basically leave it dormant until the inventory report comes out. Same thing with oil as a whole. If we're having problems with OPEC, or we're having problems like we are with, if the Russian war expands or whatnot, oil might start getting stupid, and it'll be an instrument I won't trade for a while. My trading strategy that I talk to you guys about requires the market to not be influenced by outside influences, but instead to just be rhythmic and robotic. Here, 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 where you could literally map it out like Columbus sailing across the Pacific, or sailing across the Atlantic, just like Columbus doing that. I mean, it's just very rhythmic. That's the market you want to be in. And that's why you look left, you look for market expansion, you look for the respect, and you need to understand what your instrument represents, and is it being influenced by outside events. Same thing with news. Somebody asked me a few days ago on Tuesday, I think it was. I took a trade in oil. They were like, "Well, wow, there was news then." There's certain news that literally has absolutely no impact whatsoever on oil. Literally no impact on oil. And you just got to know those things. That comes with screen time. Anyways, I want to wish everybody a happy Easter. I also want to remind you that Apex's 80% off sale once again is going till August 18th. AGIBQTJY is our affiliate code. It supports this channel. It provides me the opportunity to put together these videos and send them out to you guys. But anyways, I hope everybody has a good holiday, and I hope everybody has a prosperous next week when we're back in trading and things start getting normal again. I'll talk to you guys later. Bye.